I'm Ivan, founder and managing partner of HODL.vc, a venture capital fund focusing on blockchain and cryptocurrency investing. I'm going to let everyone do their own intros. First, we'll start with Martijn.
I'm Martijn De Wever. I'm the founder and CEO of Force of Mass Capital, and also the founder of Flow, which is a FinTech company that I founded 2 years ago. And Force of Mass Capital is a VC fund investing in the very early stages of only technology, mainly AI and FinTech and B2B types of businesses.
Hi, I'm Nikita Tchesnokov, principal at Gauss Ventures, which is a FinTech and smart industries focused fund launching at the end of this month.
Hi, my name is Todd Forest. I'm the managing director of NAB Ventures, one of the biggest banks in Australia and New Zealand. We are a venture capital fund working with the bank to invest in both disruptors as well as adjacencies to the bank or players that are able to get us into enable the bank to do certain things. So I'm here in London actually looking at startups, ideally kind of B round or C round kind of investments that we can bring to Australia, invest into, and actually use our strategic leverage points to roll out to Asia.
Alex Macpherson, chairman of Octopus Ventures. We're a venture capital investor, early stage tech-enabled businesses in which obviously the whole fintech space is really, really important. We can invest from seed at the earliest stages, and we like to be able to back our businesses the whole way through, so we can go up to a sort of Series C check. Businesses in the portfolio on the fintech side, from sort of property with regards to Zoopla and Property Partner, through blockchain, through to some of the consumer side as well.
Excellent. So we're here in London. We're London FinTech Week. London is home to 13 unicorns. So my very first question is, what does London have that makes it so special for FinTech? And what makes it so special for investing in venture capital here? And we'll start with Alex.
I think it's ecosystem, first and foremost. I mean, the UK actually leads the world with regards to financial services. And so that in its own right is a bit of a magnet. And then over the last 10 years, you've seen this sort of explosion in the whole entrepreneurial talent. People coming out of universities and business schools, they don't want to go and be a banker any longer. They want to go into, early stage tech. And it's that sort of, clustering of talent that really helps define London. I think it's also important for us not to try and out-Californian the Californians. We should focus down on the sectors that we can be truly world-class at, and financial services happens to be one of those. And that's why London has a march.
Anyone else want to weigh in? Todd?
Yeah, so I think I'm here as well. We spend a lot of time, we've made several investments in North America and in Australia and New Zealand. But what I think is unique about London is the ecosystem. And so we look at a lot of stuff, particularly in the open banking space. So the UK has rolled out their open banking laws. Well, it's coming in Australia, so it rolls out literally July, exactly a year out from now. And so we're here looking at, what sort of companies, what have banks done here, what have fintechs done here, and what can we learn from that? Can we bring some of the ideas that have been successful here over to Australia? We're a little bit lagging in that area. And they also look at, so we want to say, what are the learnings, what has been done here that we can actually take those learnings and translate to Australia?
So in London, alongside New York and Hong Kong, have been the financial kind of centers of the world for many, many years. You have asset managers, insurance companies, banks, everyone kind of working from London. It seems like the perfect crossover between tech and finance can't really happen anywhere else.
Well, I think most of it has been said. I don't want to echo everything that has been said. Perfect ecosystem. I think the FCA is also quite forthcoming from a regulatory standpoint with their sandbox. And compared to other countries, actually, that is hugely beneficial because fintech is difficult. It's a very difficult thing to do and underestimated. So you need a perfect combination between people with finance knowledge as well as the right technology people that understand that regulatory framework very well.
So I think a question that's probably on the forefront of a lot of people's minds, we hear a lot about Brexit. Do we think Brexit is going to have an adverse impact? Are other European centers becoming more compelling for venture capital investing? What are your thoughts? Start with you, Mark.
Well, it's never going to have a positive impact, that's for sure. So at least not in the short term. And that's exactly what you're seeing right now. You see that all the other countries are jumping on it, trying to get companies actually to open operations in their country. So given the fact that London is also a very expensive place actually to live, which makes it already quite hard for startups to have an operation over here, it becomes more and more attractive to move operations elsewhere. Technology naturally doesn't know any boundaries, so you don't have any borders. So it doesn't really matter where your organization is. You just need access to talent, and yeah, London is at risk at the moment. There's at risk of losing a big portion of that to the other countries.
Yeah, I think my biggest concern has been talent as opposed to kind of regulation. People keep talking about, oh, can we passport? Will we be able to passport? Will there be some kind of equivalent system by which it makes it easy to apply for an EU license? But really the biggest question in my mind is whether people will be able to come here as easily as they have been in the past in order to really drive the skills necessary to build the next 15 unicorns.
Yeah, I agree with that. The biggest threat is around the talent piece. It's markets, but it's mainly talent. And so on this trip, actually, I was just going to come to London and actually added on a trip to Israel for 3 days at the front end. Again, a lot of kind of obviously stuff that's more cyber and security related, but they're doing a whole bunch of other stuff in the FinTech space as well and expanding there. So I think that's a threat. And you know, I thought about doing Berlin as well as part of this trip. So I think it definitely is makes a much more even playing field. I think London still has the lead and the advantage, but we'll see how it plays out, particularly over the next kind of few months. So.
I mean, the wonderful thing about Brexit, or the disastrous thing about Brexit, is you just don't know. And for the entrepreneurs, they're playing what's in front of them at any particular point in time. And Brexit is another of these challenges. Certainly what we're seeing in our companies is, going to Nikita's point around talent, is how can the businesses continue to scale up and how can they mitigate some of the risks? So where you've got larger businesses that are expanding and bringing new people in, they're thinking, actually, should I be doing this in Berlin, in Paris, in Switzerland, and building their teams there? And if you're hiring new people in, say another 10, 20% of the workforce, you may well look to hire those overseas rather than doing it in the UK. Talent is the biggest threat. Totally agree.
So one of the biggest questions around VC is, how do you actually find your investments? How do you find good opportunities? What makes you special in being able to identify those opportunities as a venture capital investor? Start with you, Martijn.
Well, it's interesting because we basically measure everything, so we're very data orientated and also on this point. So we speak to 60 different parties, and quite interestingly enough, there is no correlation. So 1 year you find a good deal flow from one party, demo days were good, they're kind of tailing off a little bit in terms of quality that we see over there. And so it jumps from one party to the other. But I think at one point we've made 85 investments. Now your companies that you have invested in, they're at the ground level actually with the other companies that are being built at the same time. So they're very, very good indicators and people that can make great referrals to companies that they believe in are moving very fast. So at the moment, our companies that we have invested in are doing the best referrals to us.
Yeah, absolutely. So network has been extremely key for us for kind of moving forward over the last couple of years, so some of our previous very successful investments have really just been products that we ourselves found and loved.
So for us, we look at primarily at co-investors in other markets, and so I'm here meeting with like 6 or 7 VCs. We have tight relationships with ones in North America as well, especially overseas market. We're not on the ground, so we need to co-invest with key people there in those markets. That's really, really important for us. And then for the home market, actually, one of the things we find is actually taking bankers. Normally, they actually think about it from the perspective of who do we want to partner with, who is the commercial deal with, and we say, hey, put it on your venture lens. Think about disruptive stuff. something that's going to be completely disruptive to us in 3, 5, 7 years from now. And I'll give you $1 million. Where would you put that $1 million? And it's amazing. They're able to like change their lens relatively quickly and think like, what are the big disruptors? We may not do a commercial deal with them now, but they're up and coming. We'll do a proof of concept, we'll roll them out in a certain segment. But that's where kind of the space is going. And again, they're thinking around, trying to get the bank to think around the corner and think kind of long term is really the key. And they want to be part of that. They're actually forced in a bank. I'm not a banker, but they're forced to kind of think about this quarter and what are we doing this fiscal year. When you free them up and say, hey, no constraints, there's not a hard IRR as part of this year. We're thinking long term. They actually enjoy that. They love to think like around the bend. And some people aren't able to do it, to be blunt, but other people are. And you get them on that journey, and they're actually the biggest advocates, because then when you bring them on board, they're like, well, this is an unproven startup. Why am I betting my career on that? They're taking a big risk with this company. Well, now they've been on that journey. They understand where they're coming from. They're actually kind of backing them, and then getting them on board when they source the deal, actually to do a POC, to actually do a commercial deal, 12 months later is really key.
I mean, network and, relationships. To give you an example, I mean, we were really fortunate, in our early days to back a business that became part of the Love Film group of companies. And I think we're on our 8th business from the, entrepreneurs or the management team from Love Film. They've just gone on and done the next businesses. And I think you see that with the Betfair, group of people. And we need more of that. So the very best deal flow comes from the people you know and trust, you've worked with in the past, or recommendations to.
So if I'm a CEO of one of your portfolio ventures, what might I say about you in terms of your add of value to my business? I think venture capital, obviously there's providing the capital and giving the money to those entrepreneurs, but what can you provide beyond just capital? What would you say the biggest impact that you've been able to deliver?
Well, again, that's the relationships that you build in the world, whether it is future investors to the West Coast, introductions that you can make there, or potential clients, or press opportunities. We invested in a company called Senset, arranged a special at CNN for them. We invested in a company, What 3 Words, got their logo on a Formula One car. These are the kind of things where you can truly make a difference for a company, and especially in those early stages. You put them in the spotlight, they'll find difficult actually to find. So that's the difference you can make.
Yeah, being extremely hands-on, ranging from attracting potential clients to potential acquirers, and even just assisting in markets, opening up new jurisdictions has been something we've been working on with a number of our previous investments, and intend to continue doing so.
So I can speak a little bit about the corporate VC. So 80% of corporate VCs are set up to fail, right? They actually take a long time to make a decision, and they get the shit deals. And then once they make that investment, they can't get the leverage. But if you flip those two things around, you actually have a huge advantage. And so our entire team, I was the CEO of a FinTech that I grew 18 times and then sold it off. Same thing for my partner and all the associates. And so we've got a delegated authority. We can do a deal. We don't need a business unit sign off, because if we're making a disruptive investment, guess what? The person that's leading that business unit doesn't want to sign off on it. So we have delegated authority, can make a decision from term sheet to actually closing the deal in 4 weeks, and take active board seats. So if you get that right, and then the second piece, we decided whether we were in the bank or outside the bank. And we decided actually we wanted to sit within the bank, but very externally facing. But my team is, the investment team is 7 folks. But we sit next to what's called NAB Labs, which is 70 folks, and then NAB Digital, which is 300 folks. And that enables us to actually get that leverage point. Again, it's a challenge still, because you deal with legacy systems and you have the challenges of a big corporate anywhere. But we have an ability to actually do a proof of concept, make an investment, roll it out further, and then actually get scale. Because we own the app, we own all the internet sites, we can actually get integration. Again, it's still a bit of a challenge in certain ways, but we're able to actually get those, the impact, and actually, because what fintechs need is actually customers. And so whether that's NAB, or more importantly, our millions of customers that we can actually pass on to, that's the real key for them to succeed.
Yeah, it's a good question because actually when it comes down to it, the money should actually just be a commodity. I appreciate it isn't today, but it should just be a commodity. Then the question is, what can you add to help those entrepreneurs be great? Because if they're great, you end up with successful businesses, good investments. So for us, it comes back to, we talked about earlier, talent. How do you help the teams build world-class teams, literally world-class teams? And the other area is, how do you help them scale? And there are relatively few sectors where you can build really meaningful industry-defining businesses just within one geographic territory in Europe. So how do you help them scale across Europe? How do you help them scale to the US? We have an office in New York, not to invest there, purely to help our businesses into the US. We have a couple of guys out in the Valley. Similarly, how do you help them go to Asia? And ask the right questions as to whether they should be going. So we have individuals on the ground in Shanghai and also in Singapore. And it's by that, and putting in front of the entrepreneurs, the understanding of going, let's question as to whether we should be doing these things and when is the right time. That's what it ends up being really, really important.
So Todd has touched on this a bit, but I imagine there are a lot of corporates in the room. You guys have money, and I imagine a lot of them are thinking, well, why can't I be a venture capital investor? And if not, how might I get involved? So from a corporate perspective, how would you think, what is the best strategy for a corporate to get involved in VC? Start with Martijn.
I thought this was a question for Todd.
Oh, no.
I was going to point straight to Todd. It was that 80% that I was after.
I'll give my 2 cents on it. But, there are phases that corporate VCs go through, right? So they have phases where they were at the forefront, actually, for investing in companies, and then they tailed off a little bit and seems to be backing up and coming again. Well, the key obviously is they are the client of the technology that is being developed, right? So how can they be successful is to invest in the companies that they believe will drive their innovation and will drive their future growth. So that should be their core strategy.
I think it really depends on what the focus of the CVC is. I mean, the top CVCs: Google, Intel, GE, Qualcomm, and I think Salesforce. And really, what I think they're trying to is essentially protect their position in the market. But I think if you're just you're not a billion plus or a 10 billion plus valued company with a tech focus, I don't think that following through with a CVC fund really makes sense, as opposed to, for example, marrying with an established fund that operates within your chosen sector and really working closely with them. Because scouting deals is going to be impossible from zero. Understanding the dynamics of early stage companies when you've been inside a corporate for so long is nigh impossible.
Yeah, so and I agree with that. Like I think actually the biggest failure is actually to take bankers and make them venture capitalists. They're not. In fact, we did that kind of 15 years ago, and it's a complete failure. And so I do think it is tough. Again, as I said before, we actually do 20% where we do disruptive stuff, and so we're willing to do that. And again, keep it arm's length. And we led a deal actually about a year and a half ago where we led the round. It was a B round investment, and we got followed by we put in a small amount, even though we led it and priced the round. Google Ventures came in after us with a $15 million check. Silicon Valley Bank and Kleiner Perkins, which is a great set. And so it is a bit of a challenge on the disruptive side, but we have to kind of keep it arm's length. But I do think actually most of the stuff we do is actually very adjacent to us, right? So it's bigger than just banking itself. So a lot of the stuff we look at as certain data plays. 3 or 4 of our investments are now in the data space, which helps a bank out. But guess what? It's much broader than just banking. So it allows the model is very much around across telcos and utilities and all sorts of businesses. Actually, really to compete against the closed shops that Google and Facebook effectively are. Those are data platforms that are closed ecosystems, and we're actually trying to create an open ecosystem that allows corporates and consumers to be able to share their data. A little bit different angle than kind of Census has got yesterday. But it's a space that's actually much bigger than just banking itself. So a banking can participate in that and benefit from it because those data sets, we invested into Xero 10 years ago. We put $3.2 million in. We sold for 38x. Great return. But more importantly, we had synergies both ways. So we grew Xero to our SME base, actually, and BNZ, Bank of New Zealand. So it was a really critical phase for them 9 years ago when they were trying to go to market to get those customers. And on the flip side, actually, we were the first bank in the world to open our APIs with Xero. We did that 5 or 6 years ago. And that enables us to do certain things like we have a loan product, unsecured loan product in Australia where we can make a loan decision to businesses in 20 minutes, not 2 weeks. So that's a great way where, again, great return, but we grew the company and it helped bring innovation into the bank. And we still have a great partnership with Xero today because of that.
It boils down to what's the purpose? What's the purpose of having a CVC arm? And then as an entrepreneur or a co-investor is really understanding that. And as you heard, Xero was 10 years ago. You're going to sit around the table for an awfully long time. There's going to be economic cycles during that period. And if the CFO and the organization can, with a stroke of a pen, end the CVC, you want to probably be questioning that. At the same point, you get the right partners alongside to access the customer base, incredibly powerful.
So if I'm an entrepreneur in the audience, how might I get funding from your fund? And should I consider an ICO? I think there's a question a lot of these guys are probably having. So just quickly on each.
I think on the ICO, the underlying technology is fantastic, and I think SEOs are more the future. I think the whole thing it's an S-curve, right? So when it comes to innovation, you have these cycles that go through an S-curve where you have a huge expansion and at one point it's tailing off, and then we learn from the mistakes that we have made and then rebuild that innovation curve again. And I think we're now have that downturn actually of that space simply because the technology has been abused for people trying to seek funding that shouldn't get funding. So I think what comes out of the rubble, which are security tokens, that is something that I'm extremely interested in. As a matter of fact, we're building that in as a tokenization as an offering into our technology platform. But I would wait for that. In the end of the day, if you want to build a company, it's about the business. And too many people are now focusing on the ICOs. They spend too much time actually building their community to buy their tokens and actually not really building a business. How you get funding later down the line, that is for later concern. But you need to have an excellent business. And for now, I would stick to VC funding. And maybe in 2 years' time, I will go back and revisit this space and look at the security tokens.
I think connecting to any investor is always best through his network. And also, I highly recommend not writing, we're going to take X trillion market or X percent of X trillion market. I think that's... We're long past the days of those pitches. In terms of the ICOs, I mean, if a crypto is integral to your offering and you've built an MVP, please ICO it. If it's not, chasing the hype at the moment seems like a waste of time, as Martijn said, building communities and instead of building the product. In terms of kind of direct capital raising through security tokens, we're still in early days. Regulation is essentially still blocking this in the United States and a lot of other jurisdictions. We're not there yet, but I hope we will be soon.
Yeah, so here's my advice when someone comes to pitch me. Tell me the problem and show me the product in the first 5 minutes. And then the rest of the meeting should be, I have to get convinced on that. And then at least the rest of the meeting should be about like, well, why are you the ones to be able to solve for that? And then you have the team and the kind of the history and kind of like the kind of whys. You can be part of it. But don't spend a whole bunch of time on the background on it. Show me the product.
At the end of the day, it comes down to how you're going to build a business. And it comes back down to that, money being the commodity. So a lot of, bear in mind that a lot of VC firms cannot invest in ICOs. They can't invest in tokens. STOs, slightly unclear. So you build in the path with regards to the journey and consider that. What you can't deny is the amount of money that has been raised through ICOs over the last 12 months. It's been quite phenomenal. But where does that actually take the businesses?
Great. So we're actually running out of time. So I wanted to pull to the audience. Do you have any questions that you'd like to ask this panel? Over there. Someone like. Actually, I'll start.
Yeah, I mean, the most important thing is having the conversation at the outset, so you know exactly what the process is that the other side are going through with regards to diligence, legals, et cetera, et cetera. And kind of, you're entering into a relationship. So actually, they're making a commitment to you with regards to the time frame it's going to take to go through that process until the check is actually in your hands. So, get that understanding up front. It can be as quick as literally a few weeks. I've seen it take over a year.
Yeah. My recommendation is get transparency on the process. Be really clear on what kind of steps they have to go through. So you're aware of it and you kind of know the hurdles. The other thing that we want to do, I think probably as all investors, what we try to do when we sign a term sheet, even if it's not non-binding, we want to be able to be true to it. At that point, we've kind of partnered with you, unless there's something unique that we find out in that due diligence process. It's our reputation in the market. We're not going to go out and sign a whole bunch of term sheets and then actually not execute them. Unless there's something that really is obvious that comes up on it, that's a blocker. We want to be able to execute on that. So it is a partnership. Even if it takes longer, it's good to kind of work through that, and because it's a long partnership. It's not about kind of like I take the money and it's a year, right? I've been involved in businesses where I invested 10 years ago. I'm still on the board, and we're kind of continuing on. It's been a long partnership, and many times these are long relationships. So again, have an honest conversation as a partner.
Yeah, very much agree with both points. So just managing expectations, both sides should know what the other expects, and the time frame surrounding that.
Don't have too much to add,
No problem. So I'm going to, final question. I think everyone loves doing their own shameless plug. So what company or portfolio venture do you want to talk about that has your interest currently across your portfolio?
I think the interesting one, because it was the first one that we invested in, is What Three Words. It was the first company. It's a special one because it's the first deal you do. I remember doing the deal in Dubai, actually. I thought I could take a little bit of a rest after fundraising. I love that company simply because it is a company that works very well within a portfolio setup. We knew at the outset that it was quite a risky investment to take, but within a portfolio, it works quite well. And we backed the entrepreneur. Chris, who runs that company, is incredibly talented, and he came through. It's now it won several awards. It's received quite a large checks from the corporate space, from Daimler recently. And it's just different. It's completely different, and that's what we always look for something which is completely unique, completely different, and somebody who has the balls actually to follow through, right?
I wish I could talk about some of the amazing term sheets we've signed over the last month, but I can't. I guess my personal darling, for obvious reasons, from our previous fund has been Revolut, and I think they're going to take over the world.
Yeah, so I can't take credit for zero. That was before my time. But the first company we invested into this fund is actually a company called Data Republic. So it really is. It's a Sydney-based company that's already expanded to Singapore. So the Singapore government is using it as well to kind of govern their data sets as well as kind of third parties. So I do think it's very interesting because again, with open data and allowing kind of companies to be able to govern and kind of share their data across markets very seamlessly using kind of a security and governance platform that scales across nations. And so it's coming to the UK and the US as well kind of imminently. So we're super excited about that.
Always dangerous talking about favorite businesses. I would turn around and say a business like Calastone, which addresses the mutual fund marketplace. They're the number one player now in the UK, totally transformed that marketplace, expanded now globally. The interesting thing there is the next step, and they've managed to replicate the entire day's trading in mutual funds across their system onto the blockchain, which puts us substantially ahead of a lot of the other players in the market. So that is the sort of second bounce of the ball of a business to, really go into, a massive business is, exciting, and it will become industry defining.
Great. I think we need to wrap up for time, but thank you so much. Hope you guys enjoyed that session, and look forward to the rest of this week, I think.